Welcome to a deep dive into the colossal world of real estate finance. Today, we're uncovering the strategic maneuvers of a titan that has reshaped America's housing landscape. We'll explore how one firm, through calculated acquisitions and innovative financial structures, became the nation's biggest landlord. This isn't just about numbers. It's about understanding the mechanisms that drive large-scale property ownership and its ripple effects across communities. Join us as we explore Blackstone's empire, from its formidable portfolio to the situation it faces, and its evolving vision for the future of housing. This video is for educational purposes only and should not be considered financial advice. At the heart of Blackstone's dominance lies its sheer scale. With over $1 trillion in assets under management, Blackstone isn't just a player, it's an economic force. In the real estate sector alone, they manage an astonishing portfolio of over 270,000 residential units, making them an undisputed leader in the rental market. Their strategy isn't random. It's a meticulously crafted approach to identify undervalued assets, optimize their performance, and generate substantial returns for their investors. This isn't just about buying properties. It's about controlling significant swaths of the housing supply, impacting millions of lives. So how does Blackstone generate such immense wealth? Their business model is multifaceted, primarily driven by two key revenue streams: management fees and performance fees. Management fees are a percentage of the assets under management, providing a consistent income regardless of market fluctuations. Performance fees, or quote, carried interest, are a share of the profits generated when their investments perform exceptionally well, aligning their success with that of their institutional investors. They strategically deploy capital from various sources, including large institutional investors like pension funds and endowments, and their publicly traded REIT, Blackstone Real Estate Income Trust, or BREIT. While private funds offer less liquidity but potentially higher returns, BREIT provides a more accessible, albeit still institutional, pathway for investors to gain exposure to Blackstone's real estate prowess. One of Blackstone's most defining acquisitions, and a lightning rod for controversy, was Stuyvesant Town Peter Cooper Village in New York City. This sprawling complex, home to thousands of residents, became a focal point for the delicate balance between investment returns and tenant rights. After acquiring the property, Blackstone faced intense scrutiny and multiple lawsuits regarding its efforts to raise rents, particularly for rent-stabilized units. Tenants argued that the firm was aggressively pushing out long-term residents to convert units to market rate, undermining the spirit of rent stabilization. This case highlighted the immense power private equity wields in urban housing markets, and the ensuing legal battles that test the boundaries of investor rights versus tenant protections. Beyond New York, Blackstone's strategic eye has heavily focused on the Sunbelt region, targeting high-growth states like Texas, Florida, and Georgia. This isn't accidental. These areas boast booming populations, strong job markets, and a more favorable regulatory environment for real estate development. But their investments aren't limited to traditional apartments. Blackstone's portfolio in the Sunbelt is remarkably diverse, encompassing everything from modern apartment complexes and purpose-built student housing near major universities to strategically located mobile home parks that offer a lower-cost housing alternative. Furthermore, they've made significant plays in the industrial sector, acquiring vast amounts of logistics warehouses to capitalize on the e-commerce boom, and investing heavily in data centers, which are critical infrastructure in our increasingly digital world. This multifaceted approach allows them to capture growth across various economic drivers within the Sunbelt. Blackstone's involvement in single-family homes has been a journey of strategic re-entry and adaptation. Their initial major foray came in the aftermath of the 2008 financial crisis, when they scooped up distressed single-family homes at bargain prices, eventually forming Invitation Homes. This move, while criticized by some, was a pioneering effort in the institutionalization of single-family rentals. After a hiatus, Blackstone re-entered the market aggressively in 2021 by acquiring Home Partners of America, focusing on a quote, lease-to-own model, providing a pathway for tenants to potentially purchase the homes they rent. Their latest significant move in 2024, acquiring Tricon Residential, further solidified their position, doubling down on the single-family rental market. This evolution shows a clear long-term commitment to this asset class, recognizing the growing demand for single-family rentals as homeownership becomes increasingly unaffordable for many. Blackstone's expansion hasn't been without significant pushback. As a major institutional landlord, they've faced numerous controversies, primarily revolving around rising rents, eviction practices, and allegations of neglecting maintenance in their properties. Tenant advocacy groups across the country have launched protests and organized resistance, leading to highly publicized court rulings and legislative debates. The core of these controversies lies in the tension between a private equity firm's fiduciary duty to maximize investor returns and the broader societal need for stable, affordable housing. This debate often pits investor profit directly against tenant protection, forcing a critical examination of how large-scale corporate ownership impacts the fundamental right to housing and community stability. In a notable shift, Blackstone has also made moves into the affordable housing sector with the launch of April Housing. This initiative represents a significant pivot, aiming to address some of the criticisms leveled against large institutional landlords. April Housing focuses on preserving and developing subsidized housing units, now managing over 70,000 such units across the country. Their strategy leverages various financial tools, including federal and state tax credits, to acquire and renovate existing affordable housing properties, ensuring their long-term affordability for low- and middle-income families. This move is seen by some as a strategic response to public pressure and a way to diversify their portfolio while potentially gaining goodwill. It highlights a complex interplay where a profit-driven entity seeks to engage with a socially impactful, yet financially viable segment of the housing market. The rise of firms like Blackstone throws a spotlight on the broader housing affordability crisis gripping many nations. Their sheer scale means their investment decisions inevitably have a profound impact on local housing markets, rent levels, and community stability. This has led to increasing calls for more robust regulation and oversight of large institutional landlords. Governments and policymakers are grappling with how to balance the need for private investment in housing infrastructure with the imperative to protect tenants and ensure equitable access to affordable homes. The debate extends to the role of private equity in public housing issues. Are they part of the problem or a necessary, albeit complex, part of the solution? This is a critical question shaping urban policy and the future of housing for millions. Looking ahead, Blackstone's strategy appears geared for the long haul. A key element is their perpetual capital model, particularly through structures like BREIT. This allows them to hold assets for extended periods, avoiding the pressure of short-term fund cycles and enabling them to ride out market fluctuations. They continue to emphasize investments in areas driven by strong urbanization trends and robust job growth, believing these fundamentals will drive long-term demand for real estate across various asset classes. So what's their ultimate market impact? It's a complex picture. On one hand, they bring significant capital and efficiency to the housing market, potentially revitalizing properties and professionalizing management. On the other hand, their large-scale acquisitions can contribute to rising housing costs and market consolidation, raising questions about accessibility and equity. Blackstone's empire continues to grow, and its influence on America's housing future remains a topic of vital discussion. In summary, Blackstone's journey to becoming America's biggest landlord is a testament to strategic financial engineering, keen market insight, and an audacious scale of investment. From its vast AUM to its diverse portfolio, spanning multifamily, single-family, and specialized properties, Blackstone has fundamentally reshaped the real estate landscape. While their model has generated immense wealth and brought professional management to millions of units, it has also sparked critical debates about housing affordability, tenant rights, and the power of private equity in essential sectors. Their pivot towards affordable housing, alongside their long-term growth strategies, signals a complex and evolving role in the housing market. Understanding Blackstone's empire is crucial for anyone seeking to grasp the forces shaping modern housing. Thank you for joining us on this in-depth exploration. Remember, the information presented here is for educational purposes only and does not constitute financial advice. Please consult with a qualified professional for any investment decisions.